Hello everybody, welcome back. I'll make a quick short video. There's not a great deal more to say. So we've seen a nice big move up over the last few days now of Bitcoin. So it's broken out of two major portions of the range really. So the first thing to think about is the fact that we broke this 46,500 and we actually pushed pretty much up to our previous local high as far as wicks are concerned. Candle bodies actually, if we were just to go back at it, it's pretty much a new local high as far as candle bodies are concerned. We've also, believe it or not, got a pump signal being generated on the Ichimoku cloud. Whether or not we believe that is a different story, but if that is the case, well, I mean, it obviously is the case, but if you go by that, which normally emphasizes any portion of a trend, you really do have to think about what's the next major resistance beyond where we've gone our previous local high. And I'll be looking for these candle wicks and bodies that sit in between the all-time highs, roughly around 53, probably around 53,000. So that would be the next major target if this pump signal was a real thing, if we've got the capacity to do it. So obviously, you know, moving up this much, and again, yeah, in comparison to, you know, normal crypto. I mean, 12% is a 12% move. It's not the biggest thing you've ever seen in the world, but for Bitcoin, I suppose, especially recently, it's been a decent thing to see over a 3-day period. It's not like an altcoin move, but it's definitely a good one for Bitcoin. Bitcoin, remember, trades huge volume these days. It's not like it used to be. So yeah, 12% is a relatively big deal for it, but the main thing to focus on is going to be these two areas. If you want to be bullish for today, you want to see us hold above this area, the breakout area really, which is 46,500. If you can hold above there, excellent. And actually, if you go to the 4-hourly, there's evidence to say that we will hold there, because on this trending move, since we basically hit the golden cross and moved up, we have not really touched any other moving averages since we broke out. So the next major moving average of any significance on any time frame that I would be excited about, if you're looking to see a bounce or hoping for further upside, is going to be the 10 exponential on the 4-hourly, which is now above that 46,500. So you might even see a bounce around there. If we do lose this breakout area and we go back in the zone, it's still not a bad thing for bulls. There's plenty of areas to be picked up from. 21 exponential around 45,600, more or less the same deal for the Bollinger Band Center. 50 exponential is also above the 44,250, which is still all very much a bullish support. So that would probably feel bearish on the face of it to see a retrace on Bitcoin of about 6%, but really it's just a retest to see if this major area has been flipped into a support. And previously it was a resistance, you see, so we broke through, and you can see the power since breaking out from there. So yeah, I'm optimistic about how this is going to behave over the weekend. A little bit of a pullback into support, whether we're super turbo bullish and hold the 46,005, or we come back down to the 44,002. It's all pretty good, really. To be honest with you, it's all perfectly normal within an uptrend, especially one that's been roaring significantly. Now, if you're talking about altcoins, there is also a case for altcoins at this point. Now we're looking at this on the Patreon, but rather than looking at all the altcoins individually, which is what we normally do on the Patreons. And I have to say there was quite a lot of them that are that are not just broken out, but they're broken out with excellent setups on the dailies. So it does point to the fact that altcoins can run. I would also sort of urge you to think about what's going on with the dominance chart. We had this sort of situation before, so we had this move up, resistance, pull back from resistance, pull back from resistance, and a breakout. So each time we pull back, it's going to be good for altcoins, whether altcoins lose less money in the form of a downtrend or they gain more gains compared to Bitcoin, outperform Bitcoin. That's usually the only way to really think about it. It doesn't reflect the price, it just reflects the overall strength. So we've had that over here. So we had a big move up here. This is all in December. We're continuing with our alt season. Big move down, 200 exponential, bang, up to the trend line, back down, 200 exponential, up. So we're approaching the trend line again. Is it going to get rejected a third time, or is it going to break out? That's the main question. So I'll be looking for this as an opportunity for anyone who wants to trade alts to think about not just what your altcoin's doing or where your altcoin support is, but where's Bitcoin support at the same time. And if there is a pullback in the market, are you going to buy the altcoin dip, or are you going to buy the Bitcoin dip? Which one are you going to buy? If the market works as it would usually work, if Bitcoin does pull back by 6%, you would imagine that altcoins pull back by 6 or more percent. That's normally the way it's going to do. And with that should come an increase in the dominance chart that could take us to the trend line, currently sitting just below 54% dominance. And if we do get a rejection, we're likely to see the rejection down towards the 200 exponential, which is roughly about a 4% pullback, roughly. You know, it's going to be trending up, but yeah, roughly between 3 and 4% over the coming weeks. So that might be the opportunity to buy an altcoin dip in the face of a Bitcoin pullback that should hopefully maintain like an upwards trend. However, I keep saying, and I still believe it to be the case, that we are going to be looking at a major reversal in all markets. So basically just a consolidation. I have to keep trying to put it out there. I've not once called for a crash or a dump or some kind of chaos. I'm just calling for a consolidation. And the Dixie chart is above all moving averages for the first time in a little while. No golden cross on the daily, but you know, it's still looking quite good. We're gearing up for further upside, I would imagine, now on the Dixie, and this is like a tipping point. We also have gone for a new all-time high on S&P, and we also did the same thing for the Nasdaq as well. And Nasdaq's gone for a new all-time high also. Now these are significant moves, and the significant areas on these charts. Round numbers, talking 18,000 Nasdaq, 5,000 S&P, and with a Dixie which is curling up. We also have obviously our Bitcoin, which has now gone straight up towards its previous local high. So if there's going to be a place for a greater pullback, and I'm just talking consolidation, I'm not talking, oh, we're going to hit 32,000 tomorrow. I know that's what everybody wants to hear, but the reality is that markets trend, right? So they trend up, they trend down, they trend sideways, they trend up, they trend down, they trend sideways. They don't normally go from local highs to local lows within a day. And this is going to be the worst thing for most people, because most people just don't have any kind of patience at all, unfortunately. And they will get bored of the market, or they will try and overtrade a market, which, to be fair, is pointing quite dramatically at significant pullback territory, right? I'm not saying that this is the absolute high. I've already said that being above these two major levels, you can target $53,000, and that is absolutely a target if that's what you want to do. Personally, though, my plan remains the same. I have to keep reiterating. When you make a trade, you don't trade blindly. You make a trade based on a plan. You think of an entry point, you think of an exit point, and you do that in a rational, unemotional period. You don't trade with your emotions. You trade based around support, resistance, strength of trend, and whatnot. Which is why, you know, me getting out over here is, in my opinion, still a valid exit point. And for me to not want to re-enter around here or anywhere else, to be for that matter, does not interest me, because yeah, it's been what, a couple of weeks, you know, since I sold that top, and there has been some trades. I made a scalpy trade on Bitcoin of 5% from the low to around the middle portion around here. I did the Monero trade, which is about a 25% move. So there has been some trading going on from my end, doing spot trading. But for the most part, it's a matter of continuing with the plan that I set for myself, which is to exit around here and then allow for the consolidation to begin. Whether it begins from a higher area than where I sold or a lower area than where I sold, the plan remains the same, because the evidence for a consolidation is still pretty obvious to me that we're going to get one, and a consolidation is going to be a consistent downtrend over a period of months. And so with that, there's really no rush or any desire to jump back into this market, even though the altcoins are pointing to 5, 10, 20, and in some cases more percent up. That's really not what I'm not really all about that, especially when I'm pretty confident that after this consolidation we'll be looking at several hundreds of percents, which is more appealing and a lot less risk for me. So the risk to reward is going to be a lot greater after a consolidation. So if the consolidation doesn't begin, it's still no big deal because I know it will happen. And look, it's been a great 12-18 months worth of trading. The back end of last year we made hundreds of percent just on altcoins alone. So all of that is great, and that is that's the point I'm keep trying to put across. Sometimes you can't just trade a market every single day. This is the misconception that people have when you're talking about, I'm a trader, I'm a trader. Oh, you're a day trader? Well, I suppose you could call me a day trader. So you trade every day? No, no, I don't. I have a plan and I work to that plan. Some days I don't trade at all. Other days I'll double my money. That's how it works. So it doesn't mean that every single day you sit at your computer drinking coffee and trading while listening to the radio. That's not really what it's all about. It's about making a plan, balancing the risk to reward, executing that plan, and sticking to and making another plan and sticking to that plan. So my plan remains exactly the same. After selling the peak over here, waiting for the consolidation, whether it starts from here or it goes to 53, I'll be quite happy to say that I sold close to 53, and if that's where it's going to go, it could go higher, it might not get there at all. Nobody really knows exactly where the top's going to be. One thing I'll point to though is that when it comes to our favourite money flow index indicator, it doesn't matter how high we go, it's going to be very unlikely that we're able to put in a higher high. And even if we did put a higher high on the money flow index, that would be an extremely overheated read to suggest bubble pop anyway. So really what we're looking at this point now is going to be one significant drive of bearish divergence on the weekly, and that normally ends in tears like this one did over here. Boosh, and then boosh, or bush and bush, and then down. So it doesn't matter which way you cut it, the bearish divergence is never a good idea on a weekly. One drive is all you need. Bang, bang, and then that's it. It was down a significant and very fast amount from the peak of the second drive, 54%. So I'm not saying that that's how it's going to play. I'm just letting you know that when there's warning signals on a chart, you have to pay attention to them. You don't ignore them. You recognize them for what they are. They are warning signs. Even the RSI, as much as it looks like it wants to make a new high, it's going to print bearish divergence by Monday morning. So we always have to just be more than aware of all this. So when the money flow index gets overheated, I get scared. When it gets divergence, I get scared. The only way that I would not be scared is to see this consolidate at the same speed as a consolidation in momentum. That's natural, that's normal. This is unnatural to see this. It's good, and obviously there's money to be made here, but it's a big warning flag, and you have to, or I have to pay attention to it, because crypto's a risky business. And if you're going to be playing the risky business, you've got to be able to manage that risk. And sometimes the best way to manage the risk is to not partake in the market whatsoever. Like I said, selling what I consider to be the top or close to the top is good for me. But what's good for me might not be good for you. You might be a bigger risk taker than me, and that's fine. But I don't like taking enormous risks, and this is a risk right now. This is a risk. So long story short, we do point to further upside to 53,000 is absolutely possible over this weekend potentially. But with the Dixie, with stocks, with Bitcoin itself, there is red flags on all of it to say that a consolidation is in the post. I was saying last night, it's like it's in the post. It might have a second-class stamp on it, so a bit slower than that. It's not going to arrive tomorrow. It's not Amazon Prime consolidation. This is snail trail, snail mail. So it's going to take a bit of time, but all the signs are there for consolidation. So I'm waiting for that, and I'm happy for that, because that's what the charts suggest. That's what I would expect, given what the charts are saying. Now, where we're going to consolidate down to is the big question that everyone will want to know. Well, if it were to happen quite fast, the obvious place is still all the way back down to the bottom of this range, 38,000. We've got a horizontal. We've also got the 20 weekly here that is a big deal. And if we did come down there, I'd expect a decent bounce anyway. If we lose this area, then really we've got 34. We've got a big one down here just above 30, but just below 31. And we also have all the way down here around 27. Again, these are all trending up. So this is a giant chart that's trending up. This is a big uptrend, but a consolidation is due. It's always it's always due after a big move, and we've had our big move now. So I'm waiting for that. Anyway, there's really not much more to say about it than that. Allow for the chart to tell you whether it's an appropriate risk or an inappropriate risk. And as far as I'm concerned, it's an inappropriate risk. So I'm just going to stand back, watch and wait. This consolidation is coming. I know it. I can see it. The evidence is there for all to see. Whether we go up a little bit further before we see the consolidation or not, it's absolutely no way enticing for me to get in. The only trades that I'll be looking to do would be the one that I said at the beginning, which would be an altcoin buy the dip bounce scalpy trade based on Bitcoin pulling back maybe to the tune of around 6%, and then the altcoin scenario based on the Bitcoin dominance chart, we might be able to ride some altcoins. So rather than trading a Bitcoin, you'll be trading, I don't know, something else. And again, without trying to highlight loads of different altcoins, there was quite a lot of altcoins that we looked at last night, and a lot of them did point to decent breakout moves. So they can still run. Bitcoin can pull back and allow for these alts to rally in the form of a rejection on the dominance chart and pulling down into major supports on their dailies. So there's opportunity there for short-term trading. We might grab some, a quick 5, 10, 20% on altcoins over this next week. But I would be very, very skeptical that we have a prolonged period of upwards price action based on what we see here. It just looks like consolidation is more than ripe. It's kind of overdue at this point across all markets. So let's respect that. Well, I will respect that. You guys don't need to. I'm looking for a much bigger trade later on this year, the one that will yield hundreds of % rather than trying to overtrade and try to get 10% at the risk of losing 30, 40, 50%. That's not good. That's just not a good environment for me. Right, I'll leave you with it there, but thanks for watching. I hope you have a nice day. Take it easy.